Time. Let's get to some stocks that are on the move. Kimberly-Clark is buying Kenvue in a $48.7 billion deal. You can see shares of Kimberly-Clark pulling back double digits right now. Kate, I just want to start with you. Big deal in the consumer staples space. This sector is a big laggard. It's negative for the year.
Yep.
Just your view on this deal and the idea of staples, a defensive sector. Is that a place that you want to be right now, and the idea they could bounce off these lows?
I mean, I'd love to think that we could have some of the laggards lead to outperformers, but, just looking at third quarter earnings, staples are a laggard there as well, one of the only two sectors with negative earnings growth. And I understand the desire to consolidate and to make sure companies have efficiencies, but I really prefer the more secular growers at this stage of the cycle. We are not in the early part of the business cycle. We are not at the early part of the market cycle, and fundamentals really matter. I don't think staples have pricing power, and I'm more worried about their margins than I am in other sectors.
All right. Outside of the staples sector, this is a pretty big deal. I believe it's going to be the biggest deal of the year. Steve Weiss, coming over to you. Is this a bullish sign for the financials, the idea that we're going to see more capital markets activity, more deals being made, the fact that a deal of this size is coming so late in the year?
No, I think this is really a situation of a company that just didn't do well since it got spun off, and an opportunistic acquisition by Kimberly-Clark that likely would have occurred during any interest rate environment. They can take $2 billion out in synergies, so it's purely unique. Costs alone, rates alone don't drive acquisitions, particularly of this size, right? It's really an opportunity, because the cost of a bad acquisition, or an acquisition that doesn't really fit so-so, is much more destabilizing to a company and its culture, and culture is the backbone of any successful business. So you don't do that lightly. You don't do it, okay, rates are down 0.5%, 50 bips. I got to buy this company. That just doesn't happen.
I want to go to another part of our calls of the day. We have a very bullish call from Roth Capital on biotech and pharma. Carrie, I want to come over to you. You own Amgen and Novo Nordisk in your charitable trust.
Well, this has been a rough year for healthcare generally, and the biotech stocks just in the past couple of months began to really show a little life. That seems to have paused right now. Both of these stocks, Novo and Amgen, we think are attractive. Novo is down 60% from its high because they've lost a little bit of the momentum on the GLP-1 drug portfolio, but they made a big restructuring of the organization. We think that's all positive. We have new management at the company. They have an oral coming. They're trying to get more active. So we still like the stock, but yes, it's been tough with Amgen, again, a portfolio that's got a GLP-1. It has a few new cancer drugs. It's an inexpensive stock. Both of them are on as Joe knows, on a PE basis. But the market hasn't liked healthcare, and right now it's going to have to be proven.
Yeah, I'm going to ask Carrie about a particular biopharma name in a second, but look, I've been talking about the XBI. I've been building a position in the XBI over the last month. It's worked out really well. Today's the first day that it's punching back, and it doesn't feel good. So you kind of look at it, you realize that you might have to manage a risk. You don't want to have a winning position turn into a losing position. The biotech entry point for me is somewhere around 104.5. We're at 109 now. We're going to take a look at that. In the most recent rebalance, we did increase our exposure slightly to healthcare. We added some pharmaceutical names, West Pharmaceutical, not that excited about that one. Carrie, I don't know if you know Insight.
I do.
We bought Insight. It's up 5% today alone. They reported earnings on October 28th. Really strong earnings, hematology, oncology, reasonable valuation, upper teens. Yeah. $18 billion company. That one, I really like the ad.
All right, I want to get to another call. Carrie, this is one of yours. Charles Schwab, price target raised from 130 up to 139, still overweight at Morgan Stanley.
Yeah, we've been overweight the stock for a long time, and it's really finally come into its own. It sells for 14.5 times or less on next year's earnings. It's now fully integrated, the TD purchase. We see that $13 trillion in assets they have as a source of growth and enhancement over the next few years. All of the cash sorting is done. People have moved the deposits to where they want them. And we think as a broad-based institution on the financial side, we think Charles Schwab just offers everything that the consumers need.
Yeah, shares pulling back about 1% right now. I want to go to one more. Costco named a top pick at Oppenheimer. Joe, you own this one in the Joe team.
Survived the rebalance, barely. Costco has one more quarter to really prove itself because from the momentum score, which we're looking at 12 months in, you had some really strong appreciation from 12 months ago that's going to begin to roll off. So the stock's been under pressure. It has not been working out well. This is definitely bifurcated from what you've seen from a name like Walmart. There was a period where Walmart and Costco were both working together. No longer the case.
Yeah. Didn't Walmart just announce a partnership with OpenAI?
They sure did.
Yeah. Speaking of companies announcing those to your point, Weiss, there you go.